All right, Lowe's is out, and I just tried to get a quote, and there's a big spread between the bid and the ask. Let's see if we can see, get a determination of where it's trading. I don't know whether that's a real trade or not, because the numbers were, at least on face value, look good. $1.77 is what the company reported. I think that's a clean number versus $1.68 was the estimate. Although down from last year as far as year-over-year results. The estimate for revenue was $18.45 billion, and the company reported $18.68 billion. So for the current fiscal year, trying to see how the guidance for the entire, that looks below, because it looks like the street was at $13, and the company is now saying $12 to $12.30. Let's bring in Brian Nagel, senior equity research analyst for Oppenheimer and Company. Is that a lower forecast, or had they given a full year forecast, Brian?
Well, good morning, Joe. Yeah, unfortunately, I actually have not. I was listening to your commentary. I have not seen the results yet, so I'm going to go off of what you said. But yeah, I think that's right. So what that basically means is that for the current fiscal year, which will be January 25, Lowe's is guiding below street estimates. And it seems like it's modestly below street expectations at this point.
Sales too, 84 to 85, 84 to 85 billion for the full year sales, and the estimate was 86.23. As I thought, that first, I don't know what that is on the right side of the chart, but I think that's right now. Down about $2. So what were you expecting here, Brian? And we had you on not too long ago talking about Home Depot. I think you referenced Lowe's. Comp sales now for fiscal 24, the company sees down 2 to 3%. Is that about what you thought, about what the company was planning for?
Yeah, that's about right. So, going back to the comment, the conversation we had last week on Home Depot, I mean, this is another, softish report from a leading home improvement retailer. Okay, in this case, Lowe's. Last week, we were talking about Home Depot, obviously. But, look, this is indicative of a backdrop for home improvement that's still challenging. Now, the positive here, and I'll say this for Lowe's, I said it for Home Depot as well, is that these companies are managing this backdrop quite well. Okay, that's one big positive. Now, the other, and I'm watching our screen here, is Lowe's is, now pre-market popping up 3%. What investors are saying is that they're increasingly looking through this fundamental weakness towards maybe the back half of fiscal 24, when trends within home improvement should start to solidify, strengthen, particularly as rates moderate. And that's really the dynamic that's happening here. I mean, Lowe's, Home Depot, very well-run businesses, managing very, very well, generating tons of cash. But for the last, say, 5-6 quarters, they've been in this post-COVID soft spot, almost a reset. Given the guidance Lowe's is talking about today, that's going to persist. That's going to persist into 24. But again, the market is increasingly looking towards prospects for re-strengthening results, particularly as rates likely moderate.
Today's action, it reminds me of what we've seen over the past 6 months, because we noted that Home Depot and Lowe's both sold off a lot, and it was very uncharacteristic of Home Depot. And the results, the fundamentals really didn't seem to improve much at Home Depot, but the stock's been on a tear. So if we go and look at longer-term charts of both, they're both near highs. They're both near 52-week highs, and they've gained back all of the, I think, all of the weakness that we saw. It's so hard to see on something like that. You can see it over there on the very right-hand side of that in late 23 when it sold off. And now, as you say, these are about where the results were expected to be, but people seem to be looking through it to whatever positives are going to happen near term, right? In the next immediate term, let's say.
No, that's exactly right. And now, look, I want to be really, clear. I know I love talking on your show about these two names. I want to make sure my thought process is clear to the audience here. I mean, these are great companies. Okay, over any length of time, Lowe's and Home Depot are very, very well positioned. But it wasn't that long ago. My team and I, we downgraded Lowe's and Home Depot on the idea that this near-term, I don't want to say euphoria, but this tendency for the market to look through this near-term weakness, we think may be a bit optimistic. Because again, as I'm thinking about how 24 likely plays out here, the fundamental softness we've seen, I think, could actually persist longer. I mean, I'm not an economist, I'm not a rate expert, but it wouldn't surprise me that if rates stay higher longer, I know that's our house view at Oppenheimer. Again, to the extent that starts to get into the narrative for the broader market, and particularly for these names, that's why I think you could see these stocks coming under some pressure. Because not to get too technical here, but right now, the valuations for Lowe's and Home Depot are really towards the top end of recent parameters, meaning that there's a decent amount of optimism here. And again, I've seen this movie before. It seems like the market's willing to look through things all of a sudden until they're not. And that's where these stocks could reset lower.